Hi everyone, welcome back to episode 17 of Live Laugh Loans. I'm Myra Talley.
And I'm Shelly Panzarella. Super excited for this episode.
Yes, let's get right into rates. They've gone up a little bit.
They have, which is something that we didn't think was going to happen.
Yeah.
But we are seeing rates from our last episode up about 0.25%, right? Because we were in the 6.5% and
we're closer to 7s now.
We are, yes, which we had thought around this time we would see much lower interest rates, but we can talk a little bit about that because the Federal Reserve meeting was May 4th. May 2nd through the 4th. Chairman Jerome Powell did increase the Fed fund rates by 0.25%. Again, that affects our short-term interest rates, right? But leading into that, we saw a little bit of elevated interest rates for mortgage rates.
Right. But I think that the elevated mortgage rates had more to do with the banking.
I agree.
Than the actual Fed fund rate.
Yeah.
So where a lot of people say, or misconception, just because the feds are raising the Fed fund rate, that's going to impact your mortgage interest rates. That's not necessarily the case. And because it's expected, we don't really see that like in our rates. If they tell us, hey, we're going to raise by 50 basis points, the day comes, they raise by 50 basis points, we don't really see a shift in our market because it was expected.
Correct.
If they say we're going to raise by 50 basis points and then they turn around and raise by, 1%, then that would cause, more of a uncertainty.
Yeah.
And have more impact on rates.
Yes. Yeah. And I think you had mentioned the banking situation. So on our last episode, we talked about the Silicon Valley Bank that actually imploded or was taken over. So this past weekend, First Premier Bank was purchased by Chase because they were also going through financial instability and actually was probably on the verge of bankruptcy.
Right.
And so an effort to basically protect the financial sector, Chase purchased all of their assets, so their buildings, their employees, their clients, everything over that weekend. It was quick.
And business as normal on Monday, right?
Yes,
under the Chase name.
Exactly, which is crazy. I mean, good for the clients and also the employees, but some of that led to that emotional uncertainty in the market, stock markets, as well as our mortgage rates. So no matter what Jerome Powell did, I don't think that would have taken a significant decrease for us yet. But he did make one statement about the potential opportunity that they're going to pause and maybe rethink the increases because of what it's doing to our banking system, right?
Yeah.
So that could be good news. I mean, I think that's also something that attributes to inflation. Mm-hmm. They're seeing some positive, or I guess you could say positive notes that inflation is going down, which mortgage interest rates follow inflation.
Correct.
Right. So if they do put a pause on that, that's a good indication that inflation has, in fact, we already see that it's going down, but that it'll maybe catch up and we'll even see further decrease in mortgage interest rates, which will be good.
Which is good because with the housing market, a lot of people are on the sidelines. A lot of people are trying to time the market. And unfortunately, it's just too hard to time the market because everybody would time it if it was that easy.
Yeah.
So while people are waiting for prices to drop, rates to drop, I mean, we're already seeing an increase in our average sales price.
Yeah. So, talking through that here in Las Vegas, March average sales price was $425,000, and then April reported $5,000 more. Actually, we're taping here at the Signature Real Estate office in Green Valley, and as I was walking through the hallway, I was listening to some conversations with the realtors, and we're in multiple offers.
Yes.
Multiple offers. We have increase in sales prices where everybody thought that the market was going to be crashing. So what does this mean for us in the market today?
It means it may be shifting to more of a seller's market versus the buyer's market. The great thing about having a buyer's market is, you're going to see things like closing costs, maybe rate buy downs or something similar to that, how we've been speaking in the past a few episodes. But when it shifts over to seller, you're not going to be seeing very many seller contributions towards closing costs.
Mm-hmm.
Sometimes it goes even as far as, like home warranties are not covered by sellers. And then, your escrows, you see overbidding, you see lots of of those items.
Yeah, so I definitely think that this is the time. If you have been trying to time the market, I mean, I honestly feel like that was like a couple months ago almost, right? The
Yeah.
best buyer opportunity. Who knows, right? What are based on all this stuff that's been happening, who knew what was going to happen with these banks? Who knew that this was going to lead to this impending, pause? Well, we all knew we are going to pause for Fed Reserve, but we could be shifting back. And so if you are a buyer today or thinking about buying a home, this could be the right time. And even with the rates where they are, we talked about it earlier or in the beginning of our series, is marry the house, date the rate, right? Put yourself in a position to actually buy a home while there's inventory.
Right, right. Because, it can make a big difference. How we had mentioned that in the past. And let's say you purchase and get seller contributions and they pay all of your closing costs, and you do have a higher interest rate versus fast forward to, let's just say today or maybe even a month from now you're going through multiple bids. Now you have to pay your own closing costs. You're probably still going to pay the same rate. So at the end of the day, when was a better opportunity, is when your closing costs get covered.
Yeah.
And closing costs, just to give you guys an idea, roughly, so closing costs are basically any fee associated with the transaction, whether it's like the lender fee, your property taxes, your homeowner's insurance, your title fees to recording your name. All those things go into closing costs, and it's roughly about 3% of the sales price. So if you're buying a home that's $300,000, a high estimate roughly would be about $9,000 for closing cost. So if you can save that right off the bat, that's a win.
Yeah. Yeah. And if you think about it, 2 years ago or a year ago, most of our buyers were not only paying their closing costs, they were paying above list price, right? So more, and if we head into that arena again, just think about what that cost is going to be like for you today, plus your down payment.
Right. And if, it comes into like appraisal issues too.
Yeah.
Because the bank is not going to do a loan for more than what the home is appraised at. So if you put in an offer for a home that for $310,000, and the appraisal comes in and it's only valued at $305,000, that additional $5,000 has to be paid in addition to your down payment and your closing cost.
Yeah.
So that's already adding that.
Yeah, because in most cases, the seller is probably not going to be in a position, or maybe they would. You never know, but it's a negotiating.
Right.
And if you want to move forward with it and the seller's unwilling to negotiate to come down, you have to pay that gap, basically. Right. Yeah. Yeah. Speaking of something that I think that's out there in the news also that we talked about a few episodes ago, it's the LLPAs. Right. And there's been a lot of social media. I got a lot of agents that were like, hey, what's going on? Is this true that lower credit scores are going to get better interest rates?
Like, should I stop paying my bills?
Yeah. Does it make sense if I go late on? No. Definitely not. And no to the case that lower credit scores are not getting better interest rates than your higher FICO score borrowers today. You want to talk a little bit about the LLPAs?
Yeah. So LLPAs, it's the
loan level price adjusters.
Thank you. Even though I just said it 20 times. Loan level pricing adjusters. So depending on what type of purchase you do, whether it's, primary residence, investment property, there's a lot of different pricing adjustments that go into pricing out your loan. So when somebody says, hey, what's my interest rate? We can't just give you a straight answer. We can give you an average, but there's so many things that go into that. With the LLPAs, so what's coming out is they're changing how much they're charging. So technically, somebody with a lower credit score is going to be charged less than what they were previously, but that does not mean that you're going to get a better interest rate if your credit score is lower. Anybody with a higher credit score is still going to continue to get better interest rates. It just means those with the lower are going to be charged less points. So they are going to see better interest rates. And that's just to make homeownership a possibility.
Yeah. Yeah. And I think that's the other part too. Everybody's like, this is the big Biden housing stimulus or whatever you want to call it. I mean, the reality of it is, it's being done in his administration.
Correct.
So, of course, yes, this is technically under the Biden administration. This was something that they imposed back in January that was to take effect May 1st, which is why in the very beginning when they announced it, there was a lot of noise, and then leading into it, there was a lot of conversation about it. I mean, and how it just goes to show you how people spin the actual information on it. But to your point, the housing affordability is a great concern for the nation across the board. Right. And so this is one opportunity. That's why we saw the FHA upfront mortgage insurance premiums get reduced, VA as well, their funding fees get reduced. And then the cost for a lower FICO score borrower is being reduced. Doesn't mean that it's better than a higher credit score borrower. It's just, as an example, if it were 2 points, if you had a low credit score, to get that same interest rate today could possibly cost you 1% versus
Correct.
the 2%.
Right. Or somebody with purchasing the same price with a great credit score versus a low credit score. Before, you would see as much as like a 2-point difference. Mm-hmm. Now maybe you see like a 1-point difference.
Yeah.
So the gap between the two credit scores is now smaller. But again, always great credit is going to get the better interest rates.
Yeah, most important thing I would say is make sure you work with a good lender who can kind of educate you on that. But also don't believe the hype, right? I think sometimes we all just, even with our housing situation today, like, is this the right time to buy? You got to do what's best for you. You have to work with professionals that are going to give you the right information. So you're not feeling like, because I have, just to hear that alone, I don't have to have such a good credit. I can have a lower credit score today and I'm going to get better than a person who has a high 700 credit score. Completely false. So make sure that you connect with us if you have any questions about the mortgage or real estate industry. Let's shift gears.
Okay.
And let's talk about this hockey puck that is
yes.
Our Golden Knights. Go Knights, go. Excited to see them in the playoffs.
Super excited.
Yes. It's been, last year they had an early release. It's just the season and they didn't get any playoff season at all, which is funny because actually I was watching the game last night. So a lot of babies from the team were born just like in the last couple of
oh my gosh, that's so funny.
Months, right.
They had a lot of free time.
Exactly. Coach Cassidy was like, well, let's just time this around when the season was over, and now we're 9 months. And, the timing around that could be coincidental, which I think probably is. So probably no babies happening next season just because they're in playoffs. But so excited for the community too, yes. and obviously for our Golden Knights. It's, being in the arena, it's definitely different. It's a different than we weren't really in there. I guess we were in there the first season, but it's great to see the community come out for them. Although, what was it, game 2 of round 2? And they got their hands, they got their
pretty quick too.
Yeah, it was, yeah. I wasn't at that game, so it wasn't me that was the jinx on that.
Well, maybe that's why that was the jinx on
Very
that.
True. Could be. Yeah, because I was watching the game in Edmonton. But my husband had said that it was like immediate. The crowd just went from here to like down. Yeah. But they were still packed. The house has been, or the arena has been packed. Obviously, it's just a great.
Yeah. I think we hold the Golden Knights a little closer to our hearts because it is a Vegas-born team.
Totally.
Where, if we get other teams from other cities, it's kind of hard to say, hey, I am a diehard Raiders fan. Although we're rooting for them because we are Vegas locals, that is our NFL team. It's a little bit different with hockey because it's truly a team that was created just for our city.
Yeah.
And as somebody who grew up here, never having a local team was just, like weird.
Yeah.
But now that we have it, it's like great. So it's just people get so excited for this team.
I agree. And even understanding hockey itself, right? Because I don't know about you, I was not a hockey fan. I didn't know anything about it. And you look at all the different even like junior leagues that are being, right across the street is
Dollar Loan Center.
Exactly. All of that, that has come about because of the Golden Knights coming into
Yeah.
our city. So, listen, I'm hoping that they can make the run to become to get in the Stanley Cup and be
I think,
the
wasn't
winners.
it, if they won yesterday's game, they were favorites to win the Stanley?
Really?
That from like sports bets standpoint,
Really?
like, yeah.
Well, we'll see. We'll see if they can hold on. And they looked amazing yesterday. So if they can hold on to that same energy and play exactly the same way that they did for the next games and rounds, then I would say they definitely are a contender.
Yes,
for sure.
Let's hope.
Let's hope. Yeah. Also, we're coming to an end for our school year.
That's it.
Yeah, and for some of us, an end for school, high school, and what do you call this era of school? It's before college, so is it
graduation? I don't know. High school.
High school?
Yeah.
I don't know. It's elementary, middle school,
primary,
high school.
I don't know.
Primary. I think that's what it is. Primary education. Yeah, so she's going to be, so Sydney is, we're like next, was it the 17th?
Yeah.
I think we were talking about this, is my last wake up call duty. Yes! I did a good job. 18 years of having to wake her up in the morning. Seriously. I think I'm getting past that now. Now all the excitement of graduation. She committed to University of San Diego,
Yay.
Which is exciting.
Yay, Sydney.
Yay. Yeah, so super proud of her for that. And then your girls, you got some good changes happening there, right? You've got your little one that's going to be shifting back into middle school?
Well, no. So my little one's just going to be fifth grade.
Fifth grade.
And then my oldest one, she's going to be, she's finishing up her freshman year of high school.
Yeah.
So she's excited to not be a freshman anymore because, it's like she said nobody likes freshmen.
Why is that? I think some seniors might say nobody likes seniors too. There's like a major senioritis that's happening right now with Sydney. Yeah. She's like not wanting to go to school or whatever.
Aww.
But yeah, that's exciting though. So any plans for the summer?
We are going to take a trip to Hawaii.
Awesome.
Yeah, so we're looking forward to that.
Yeah, that's a favorite family trip. Let us know what your favorite summer trip, and if you have a summer trip planned, drop a comment below to let us know what that is, where you're going to be headed. We did our big summer trip in March, so we are just going to be headed to University of San Diego this summer. So if you guys have any questions about mortgages, make sure that you like and subscribe. If you like any information on here, make sure you share this information and check us out on the next episode.
See you next time.